Good morning, it's Jeffrey Cohen, May 24th, pre-market. We're going live. Let's talk about the market. So, I wore a red shirt today. Hope everybody likes it. It's to talk about the markets and how things are just a little bit tricky right now. And so, last night I went to bed, markets were green. This morning I woke up, markets were red. Last thing I posted was that, unfortunately, one of our friends, BBAI, Big Bear AI, was down 27%. And we also noticed that Shopify was down. Was it Shopify? No, it was the other one. It was Snap. Snap was down. And Snap sent out a letter to its employees saying, oh, it's down 33.33%. So what I understand was that Snap sent out a letter saying that the economy has taken a really big turn for the worse starting in April. And so that feeling that I had that we were in trouble, that the economy was going to go down, that retail was going to be in trouble, it's got one more validation point. And so one of the things that I wanted to do this morning is I want to talk about where is the weakness in the market. Where is it? Let's focus your attention on maybe the places where you shouldn't be invested when, things are tough, when there's a red day today. So what you see today, I don't know if you can see it on my screen, is you can see the S&P futures are down almost 1%. The Dow futures are down 0.5%. The NASDAQ futures are down 1.5%. That's a lot, by the way. Market opens in 29 minutes. Where's my Russell? There it is. Russell's down 0.75%. And so ultimately, let's talk about this. This says that whatever stocks you have, people are making bets that the stocks are going to go lower at the open. It's so interesting because the whole day is going to get traded first thing in the morning. So where's my group? Let's take a look. So I've got a couple different lists now. I've been doing more fundamental analysis. By the way, I'm losing my shirt in this market. Personally, it is terrible. It's horrible. I hate it. Hate every minute of it. This market is killing me. It is busting my butt. Well, let's take a look. So, in terms of stocks that we follow, that we like, pre-market, so there's a lot of stuff down. These were stocks that actually had good fundamental, intrinsic value. They're just good, valuable stocks. The problem is they're valuable looking at the rearview mirror. And I can start walking through some of the things that I found. So I have a list here of stocks that I wanted to check out, right? So Tupperware, they blew it. Self-inflicted wound. Retractable Technologies, government contracts slowed down. Foot Locker, self-inflicted wound. What I mean by that is they made a lot of money, they looked great, and then they spent all the money, they bought back stock, they borrowed money, they did weird things, and now they're in trouble, right? Self-inflicted. The rocket companies. Who is going to get a mortgage when mortgage rates are twice as expensive? Who is going to refinance a loan to pay more? Nobody. So everyone who's out there in the home mortgage market's in big trouble, right? So those are things to think through. Down and strong fundamentals means rear view mirror, right? You can't drive looking in the rear view mirror. You have to look forward, and that's what Snap tells us, okay? Current efficient portfolio. I'm going to give you a little insight. These are the stocks that have the most kind of kick, right? Bang for the buck. They are aggressive, but they have the least amount of risk when you hold them together. This is like yesterday's picks. And yesterday, actually, they went up. Look at that. You would have made 3-4% against an S&P 500 that made like 1%. But now today, this morning, pre-market, they're set to open down about 3%. So you would have lost all your gains from yesterday. The larger portfolio, all down. So what this means is there's bets against the S&P 500 there's bets against the stocks that have the most amount of expected return tied to the S&P 500. This is not retail. This is not retail investors randomly throwing darts. These are people who know what they're doing, who are saying, market's going to fall today. I want to be out of the stocks that have a lot of kick. And I probably want to be into a bunch of stocks that are not, or I want to just be short the market. Money managers. How are we doing on money managers? It's a lot of red. A couple of green, a lot of red. By the way, I have a hypothesis. Don't sue me and don't hate me. But Morgan Stanley, I believe, is a bellwether of this market. So I've been doing some homework on Morgan Stanley. They owe a lot of money. They have debt of like $230 or $240 billion. They have asset exposure on their balance sheet. I can't get an exact number, but I want to say it's between $150 and $300 billion. So let's say the market falls by 1%. If the asset exposure turns into problems, customer defaults, probably 1% no one cares, right? But let's say the market falls 20%. Morgan Stanley's on the hook, and they're going to be marking to market, and they're going to be spending some of that shareholder equity to cover customer defaults, to cover stock market falls, debt, fixed income falls, the value falls. So I'm watching them. Yesterday, Morgan Stanley was up 4%. Everyone was happy. This market was a beautiful place to be yesterday. Today, not so much, right? Specialty retail and furniture, this is to me, is the true canary in a coal mine. And I just found a new company, Conn's Furniture Store. So let's take a look. So Abercrombie, there's no way. You can't make this up, guys. Abercrombie & Fitch is down 31.72% pre-market. Okay, so what happened to them? I got Big Bear, I got Snap, and now I got Abercrombie & Fitch, right? And Urban Outfitters is down 7. Now, we like Urban Outfitters. Now, I'm not 21 years old anymore going and buying the fancy stuff, right? Although I do have a nice red shirt. The Gap is down 5%. So these are stocks that are very sensitive to people's ability to spend money, maybe money they don't have. Now, what's interesting is Petco is up 10%. People love their pets. Maybe they love their pets more than they love themselves. I know people who are like that, actually. They really love their pets. Nothing bad's going to happen. They buy the frozen food. They buy the special cat toys, the special litter. It's great. Let's take a look. These are my crypto and my physical miners. So crypto's down. I noticed last night crypto was down a little bit. It's not really down. It's 29,231. That's not really down. It's not great. I'm going to hang on to that for later. But what's interesting is Newmont Mining is up pre-market. Hecla Mining, physical gold is up. So this is always strange when you see gold going up in the morning on a red day, because this tells me there's some fear. My guess is if I look at the VIX is going to be through the roof. There's other ones to look at. Let's just go to cannabis, and let's just go to chips. Chips and dip, baby. So pre-market cannabis. Down 2%, down 1%. It's not bad. Cannabis is not a bad place to be right now. Where am I on chips and dip here? Chips and semiconductors. Now, we know, like NVIDIA, right? There's those issues with the acquisition. No, that's Broadcom. Broadcom is buying VMware. By the way, what great purchase. By the way, if I'm Dell, I'm very happy right now. My guess is that Dell's through the roof. But look at that, chips are down. You know what they say when the chips are down? But no, we're not going to make bad jokes. That's not what this is about. This video is not about puns. I'm so sorry. So, a couple things I want to share. Foreign stocks. Jeffrey, what do foreign stocks have to do with it? And please don't tell me that you're like, that guy, right? No, I'm not that guy. But let me talk to you a little bit. These are tickers of companies that are foreign owned. They're foreign companies, but they're listed on U.S. stock exchanges. UBS, you've heard of that. It's a bank, right? BEPC. There's some asset management firms. PASS, SAND, LSPD. So tech companies, financial service companies, but they're incorporated in other countries. They're not American companies. So we have now removed them from our model. And we did that so that kind of what I'll call an asymptotic risk, which is it's one thing to have risk because you have high beta and because you move with the market, or maybe because you lost money and this, you didn't make a lot of profit. But to have this like foreign risk, you had Peru, Luxembourg, Guernsey, Canada, one or two Mexico, which is totally cool. We love Mexico. But just weird, like places where things were incorporated. I don't want those country risks messing with it. So I want to show you something else we did. We did some significant homework yesterday. By the way, this is why our white paper isn't done. And if you're waiting for a white paper, I'm so sorry. You're just going to have to wait a little bit longer, but hopefully not too much longer. So we did some homework. So these three stocks move fast and had high volume. Okay, and we looked at them, and they really are down, Jenny, Zyme, down, but loaded recently. Could be a runner. And then LWLG is a trader's paradise, just moves every day. And then we looked at companies that had positive beta, positive net income, positive cash flow from operations. They were down in price significantly, like at least a third, but had better than a 10-to-1 ratio on total capitalization, which is debt plus equity, divided by cash flow from operations, and total capitalization divided by net income, and they both were 10-to-1. This means bargain, bargain basement, go to Dollar Tree. What happened? Well, Coinbase, issues. Big, hairy issues. Now, whether or not you're a Bitcoin fan or crypto fan, they just have issues. That's some missteps. Tupperware. Kind of talked about it this morning. Tupperware, some small operational issues. They built inventory. Sales are a little bit down. Costs are a little bit up. But they blew it. They blew a lot of their cash. Retractable Technologies has a government contract, a TIA, to build more facilities. They make the needles, safe needles, the retractable, spring-loaded, sticky part, so it doesn't hurt you. And the government bought a ton of those for COVID for the vaccinations, the shots. Well, government contracts dried up, revenue dried up, profits dried up. Haven't looked at Conn's Furniture yet, or Big Five Sporting Goods yet, or the Children's Place, or Big Lots, but these are 4 retailers, and you could just imagine what's going on with retail right now, right? The Rocket companies, I mentioned before, it's a financing company, right? It's Rocket Mortgage. It's mortgages. When mortgages are at all-time highs, housing starts are down, and refinancing is probably to zero, it's not going to be helpful. Okay? Cash is probably the same business. Foot Locker, totally self-inflicted wound. They just did something really stupid. So Janice Henderson has been down a lot, and I'm not sure why. I'm really not sure why. It's a UK-based company. It's a money manager. They do funds. Cleveland Cliffs is only down 5%. It's not down 35, 50%. Great fundamentals. This is a bet on the U.S. economy. So if you believe the U.S. economy is going to keep growing and keeping strong and needing steel and iron ore, you want to be in Cleveland Cliffs. They're a very well-run company. I love the company. I don't know if I love it at $22 a share, but I know I love that company. And there's others to look at, but the big thing here is these are all sensitive to the economy. And so to buy, as an example, to buy Best Buy and then to have a recession and no one goes and buys a new TV or computer or video game, you're in big trouble. Winnebago. My guess is Winnebago had a great year last year, right? People are on the road again. Now gas is $5 a gallon. No one's on the road again, right? And we looked at these, right? We looked at them. By the way, sporting goods in general, sporting goods and sporting apparel's down. We looked at the stocks that just looked based on multiples, and 9 were up pre-market, 4 were down. Earlier in the day, yesterday, 8 were up, 5 down. So it looked good. But I don't think you or I both can make investments based on some basic multiples. I don't like it. I don't think it makes sense. And so we are not going to be the people that say, oh, it's easy. Just do a quick search and wrap it up. Because now let's take a look at these. Down a third or more, and strong fundamentals. There's 5 up. There's a bunch unchanged. 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14, 15, 16, 17. 17 down. So you can't count on just some straight multiples. I'm sorry. You have to really understand each company that you invest in and keep up with it. So let's see what else is going on. I got a whole list of stuff to show you. Let's dig right in. So yesterday was, wow, a great day in the market. Look at how green it was yesterday. Now, Broadcom went down because Broadcom's buying VMware. That totally makes sense. Your software companies, DIDI is going to be removing their listing from the U.S. But the economics of software may change because of the acquisition of VMware. If we take a look at crypto, you see it's all red. But you see that the euro is 107.1 to the dollar. So the dollar is weakening. That's actually good for the stock market. But the dollar's weakening. $1.07. It was $1.39 not long ago. So I don't know if it's because our president has effectively declared military support for Taiwan. He said hello, period, to Kim Jong-un. We got a war in Ukraine. Just the dollar's weak right now. And that's not good. What's interesting is the dollar's weak and Bitcoin's weak. So Bitcoin's twice as weak, right? Because it's against the dollar. Let's look at the futures. It's not bad. The Nikkei was down last night. Europe is down. I'm sure if I look. Interesting about the VIX is the VIX has not popped up. So this is not a fear-driven, oh my God, I got to sell everything. This is just another day's action. Which tells me, sure, you might have a red day, note the red shirt, but it may not be a red day all day. It may just start red. The Russell's down less than 1%. The NASDAQ is down less than 2%. S&P's down 1%. Not great. But look at crude oil. It's still at 110. The economy's fine, according to crude oil. Gasoline came down 12 cents, which is great. Next time you have to put gas in the car. You know, I put 5.5 gallons in the car yesterday to top it up. I want to say it cost me almost $30. It was crazy. I really felt it. I didn't want to go out to dinner because of that. $30 to put a quarter tank of gas, third of a tank of gas in the car. And it's a pretty small car. So bond yields are down because bond prices are up. That's going to be great for our fixed income friends. Let's take a quick look at fixed income yesterday. This is interesting. The 30-year popped up over 3%. We're at 308. That's important. And the 1-month yield is down again. So that yield curve is becoming more steeply sloped, which actually is a good sign that the economy is going to be fine. Because when it inverts is when you hit recession. So bond market, US Treasuries is not showing that. Let's take a look at this. This is my favorite chart on fixed income because it shows, it's FINRA, by the way, FINRA with Morningstar. By the way, I want to thank FINRA not only for regulating us as a registered investment advisor, but providing such great information. So 9,100 issues traded. These are corporate bonds. 3 advanced, almost 6 declined. So it's about 1 to 2 ratio advancers to decliners. So fixed income was down. When we look at the highs to lows, this is interesting. 38 new highs, almost 1,000 new lows. So, but this ratio was much worse. So what we're starting to see now is a few bond issues looking better. On investment grade, you're still about 30 to 1 new lows to new highs. Investment grades were down a full 2.5, 2.25 to 1. High yield actually went up. So maybe what people are figuring out is they're going to dip into higher yield stocks, and they're going to take the time and do the due diligence like I was doing to try to find one or two of those high yielding debt instruments that they want to buy. And convertibles were about flat because the equities were up. Anything else to talk about? So what should you do? Well, that's always a good question. So let's take a look at the S&P 500. And I want to pretend for a minute that you're not a trader. You're not like every day trying to make your profit in the market. You're an investor. So if you look at the market over 5 years, 5 years ago it was at 2,400. Okay, so you rode it up to 2,900 and it crashed to 2,400, 2,500. You rode it up to 3,400 and it crashed almost that quickly to 2,400 again. So it came back to where it was, but then it climbed all the way to 4,800. So you doubled your money in about 2 years. Now that's great. The fact that we're giving a little bit back from 4,800 to about 4,000, so we're giving back about 20%. For most people, this is a 20% discount on new stocks that you might want to buy. And so if you're putting money in the market every month, if you're working and you got a 401k, you got investments, just keep investing. Because at the end of the day, every time the market goes down, it's a discount for you. Now, if you're a day trader, if you're trading every week and you're trying to live on that money, that's a downward trend. And I would not be in the market with highly risky stocks right now. I would wait. And the reason that I say I would wait is because right now, more stocks are hitting new lows than new highs. So this updates. This is the new high to new low. And I want to say yesterday it was like 5% new highs, 95% new lows. 17% of stocks are trading above where they were over the last 50 days. 83% are lower. 18% are higher than they were over the last 200 days, which is 10 months of trading. 82% are lower. So on average, 82% of your stocks are lower than they were a year ago or 10 months ago. So you're down. On Twitter, you get a lot of kind of tough guys and tough women out there saying, "Oh, suck it up, Buttercup." Well, you're down. I'm down. I'm not crying over it. I might buy more, but for right now, I'm not buying anything. I'm sitting on my hands. All my cash is locked up tighter than carrots in a rabbit farm. No one's getting those carrots, right? The cash is locked away. I'm not putting it into new stocks. We're just waiting it out. And I think you should do that too. Just to quickly look at the stocks that I thought were interesting. So you saw Big Bear pre-market down 27%. First off, we like Big Bear. We like the mission. Structurally, they don't make a profit, an economic profit. So you're really, when you buy that stock, you're buying the mission, right? It's actually our mission, which is to use analytics and software to help with very difficult decision making. We love that. We're even trying to use quantum with that. Rewalk helps people to walk that have spinal injuries. God, what a great business, especially for veterans in the United States, in Israel, in Germany, and in other countries, right? These are people that can't walk that actually can get their life back. It's 87 cents a share. It's probably worth looking at. Flex Steel, very well run. They make furniture and they put the heavy metal coils in the furniture so that it lasts longer. I love that. It's a well run company, We like it. I don't know about at this price. That's the thing. Because today, the market's down, right? So everything's going to be cheaper. Cleveland Cliffs. I love Cleveland Cliffs. Oh my God, I love that company. In fact, it's a great company. Great, well run. They're very conservative, right? But at $23 a share, it might be looking a little expensive, especially if the economy's going down. Coinbase, super cheap on the fundamentals, but looking forward, I don't know if they're going to make it, right? I don't know if Bitcoin's going to keep rolling or not. And on and on. What was the other one? It was Snap. Snapchat. How's Snap doing? Oh yeah, down 34%. Now we don't have a position in any of the stocks that we've just talked about because that's not what this is about. This is not pump and dump. This is about research and development and education so that you benefit and maybe you come over and you buy some of our services because we do help institutional investors, money managers, very, very large investors, and those who want a little more of a sophisticated take on the market using data and analytics. But Snap is down. What's interesting is if you like that kind of stock, why wouldn't you buy it today at $15, right? It used to be $25. What else was down? Where was it? There were some others down too. So market opens in 4 minutes. Good luck today. Let's see if it's still red. Yep. S&P 500 still down almost a full percent. 1 sec. And so have a great day. Good luck in the markets. If you like the video, leave a comment below and hit the subscribe button. Really helps us. We are not paid to make these videos. That just tells us you care. And if you want, check out the website, www.chicagoquantum.com. Thanks a lot. Good luck today. Bye-bye.
Okay, cool. I gotta go.
I know. Hi, Annie. I'll say goodbye.